Welcome to Barenaked Money, the podcast where we strip down the complex world of finance to its bare essentials, with your hosts Josh Sheluk and Colin White, portfolio managers with Barenaked Capital Management Inc.
I am very, very pleased to be joined today by Nathaniel E. Baker of the Contrarian Podcast. Nathaniel was a very kind and gracious host from myself to appear on his podcast over the summer, and we had such a great chat and had so much more to talk about. We figured we'd invite him back onto our podcast and have a chat at a more interesting time, maybe in human history. So welcome, Nathaniel.
Thank you so much for having me. I'm very excited to be here.
Awesome. So you the contrarian investor is maybe you could take a second to describe what the goals of the podcast Contrarian Investor are and what you've been trying to accomplish and maybe what you think you have accomplished and what is left to be accomplished.
Yeah, good question. So the tagline for the podcast is we give voice to those who challenge a prevailing sentiment in global financial markets. So basically, it's a broad umbrella of a term that encompasses anybody who goes against the current trend. And this can be loosely defined, but basically, if there's something going on in the markets right now that is popular, we want somebody to come in and take the other side of it. And the purpose of this is not so much to generate alpha, to get returns on investment, but just to surface this whole idea that the prevailing thesis may be wrong. And as you know from covering financial markets, things change pretty quickly. And what's going on is often really just is something that's papering over broader effects of underlying problems of various kinds, or it could be the other way around too, underlying promise. So anyway, so that's kind of the idea that I had going in, and the background for it. Like I've covered hedge funds most of my career, or at least I did up until I had started the time when I started the podcast. And as you know, hedge funds the chase for alpha, and you really need something that is not priced in. So you need to have something that's an opportunity that really nobody is aware of. And if people are talking about it, it's too late. So that was the other idea for this, was that ostensibly maybe we could even keep this on an institutional level and give institutional investors something worth listening to. So that was basically it.
Well, and that's I think that's why we align, because we spend a lot of our time trying to educate people on, maybe not the full story is out there, maybe attacking some of the conventional thinking, because, groupthink is a very dangerous thing, and
Indeed.
Prevailing wisdom, so often it's not that wise, but it's difficult to have a contrarian opinion and be based in something that's real. And the accuracy of predicting the future is hard for both sides, both those who are buying into the status quo and those who are challenging it, predicting the future. I was flipping back through your podcast episodes early last year just to see what was being talked about, and there was a couple of comments there about being wary of the Magnificent Seven and how it's time to take risk off the table. And I'm curious, just going to ask you absolutely cold. Do you think that those were failures or mistakes to say those things in January, February of this year, or do you have a different opinion?
Oh, no, I think it's very fair to say that those were wrong. I don't know about mistakes, but the classic interview question, what's the biggest mistake you've ever made? And the answer is, I haven't made any mistakes, or it's your biggest failure, right? And the answer is, I've never failed. I've fallen short on a couple of goals, but it doesn't qualify as failure. So it's maybe not entirely fair to call them a mistake, but they were certainly wrong. And this is where it gets difficult, because being contrarian does not make you right. Sometimes it just makes you contrarian, right? And to your point, at the start of the year, a lot of people were saying to take risk off the table. And you can go further back and look at people who were saying that Bitcoin and cryptos were, insert negative adjectives, right? I'm not gonna repeat all of it, but and look at where Bitcoin has gone now. These last couple of months, it's been literally parabolic. So yes, there are very often, and I've also gone through the archives of the podcast and seen just how often people were wrong. But again, the exercise is not so much to be right as it is to surface doubts on the
Yeah.
prevailing thesis. So
I would maybe take it a step further and take a look at what was said and when they said it and say, you know
absolutely.
what, based on the information that was available at that time, they
Yep.
were right. That, you can do everything right and still lose. And I think that there's a little bit of comfort, wisdom, and also freedom to develop an opinion now. Like if you have an opinion today, it's based on the information available today. As the world unfolds, it may or may not be the best route forward, but that's unknowable. So to hold ourselves accountable to outcome is I think it's going to make the conversation a little bit more cloistered. People will be a little less apt to say what's on their mind.
Absolutely. That's exactly right. So yeah, so it's perfectly fine to be wrong. It's perfectly fine to make mistakes, right? They don't teach you that in school. They say that if you make a mistake, it's a failure. But in the investing world, and this goes back to people, Ray Dalio has said this, is that
Yeah.
and in life, you're going to make mistakes, and you should. And that doesn't mean you shouldn't take risks within reason. So yeah, so it's all about, creating arguments and counter arguments, and in the end, going with what you think is right based on all prevailing information.
I mean, professionally for us, we just try to stay thoughtfully diversified and not get too confident because overconfidence leads to fragility.
Mm.
And if a certain outcome is required in order for you to have success, you're going to have a fragile situation that's maybe not necessary. The secret to long-term wealth creation is not blowing it up. It's not about hitting the one home run. It's about never giving it all away.
Yep.
But there's way more interest in, that home run, that quick hitter, that hack, if you will.
Yeah, it's human nature, isn't it? I mean, we want that, and the numbers, if you go at the numbers, as you know, if you invest in an index, the chances are that you're going to outperform individual stock picks pretty much every single time. Unless
Yeah,
your name is
no,
Jim
but
Simons, right?
yeah.
Yeah.
Well, I'd give you the caveat that that's most true in the U.S. space because price discovery is very active there. Those markets are very efficient.
Fair.
And I think that thesis begins to lose a little bit of steam if you start getting in less efficient markets and smaller geographies. So, but no,
Sure.
absolutely true, absolutely true. So, what's your favorite contrarian opinion you've heard in the last 12 or 18 months? Do you have a favorite contrarian opinion, one that caught you off guard and said, "Huh, that really is different. My brain didn't go there."
Wow, that's a very good question. I have to think now about some of the ones that were on. I just recorded somebody actually yesterday, and he is bullish on natural gas. Not so much the commodity itself,
Hmm.
but what he calls the midstream, I guess, natural gas companies, or the people that are developing pipelines and other things. And his whole thesis is that natural gas is the future energy that people and that the world is going to be using, and that unlike oil, it's a scarce resource, but it's nowhere near as scarce as oil, and it's cleaner than coal. And then these alternative energy is not there yet, and needs a bunch of other things. So that was, maybe it's just because recency bias, because it's the most recent one that I recorded, but that certainly opened my eyes a little bit.
Well, and that's one I haven't bumped into. As soon as you said it out loud, I started to say, what, those blocks kind of fall in place. And to what you said earlier, it's that thing that's not being talked about. I mean, one
yeah.
of the definitions of an outsized opportunity is to find something that's not being talked about. Now, not everything not being talked about is an outsized opportunity, but
Right.
that's the pool you got to go fishing in,
Yeah.
in order to find those kind of opportunities. What's I guess the worst would be a bad question. I don't know if something comes to mind as to the biggest blunder you've seen in the contrarian space of somebody that had really strong convictions on something that just did not pan out at all, maybe despite the actual intellectual integrity of the idea in the moment.
Yeah, well, I mean, I'll tell you, we can go back to the start of the year, and I had a guy on, a very respected individual, and he said that, yeah, we should start taking risk off the table with these Magnificent Seven stocks, and that
Hmm.
he thought that things were going to peak in March of this year. And that was his view at the time. And as we know, that did not happen. The Magnificent Seven and tech stocks have been on a huge run. I mean, there's been, fits and starts along the way, but if you had listened to this guy, and again, very well-educated guy, and his views made sense in light of the information at the time, but it is something that I think it's fair to say kind of blew up in his face. So,
oh yeah, yeah. Yeah, no, I mean, again, they say markets climb a wall of worry, and all along the way, there's people who reach their turning point, and I guess this is also what leads into conversations about market timing. Getting in and getting out of things, and math doesn't work for that. Like if you take a look at any period of time, I mean, there's no predictable way. No, I have never seen a convincingly predictable, replicable way to time in and out of things, because it's just too amorphous, and the market is the number one leading indicator. That's where people express their opinions first.
Yep.
To a large extent, the market movements are based on the fact that reality has either lived up or down to expectations, and that's going to drive the shorter term market movements. So
yeah. I should say we did have some pretty good predictions here. Back in July, we had a guy who said that gold was set to move higher. That's worked out quite well. And
what was the basis of that? I'm just kind of curious. What was his rationale for saying that in July? Because I'm always fascinated by the gold story. I'm not necessarily a gold fan, but I'm gold curious. I like hearing the rationale different people use.
I think it was just that the Federal Reserve and that had debasing the various currencies. That was part of it. The uncertainty hedge over all the geopolitical uncertainty. That was something else. And a lot of fear out there in the market, and also the prospects of Fed rate cuts, which at the time, I'm not exactly sure of the timing, but Fed rate cuts are bad for the dollar and good for things like gold. And so if that starts happening, and if the central banks start debasing their currencies further, generally that'll be good for gold. And this is despite gold being at record highs at the time that we recorded, and it's now at fresh record highs. So it's moved up even more since July. So I thought that was pretty interesting.
The rate cut conversation is interesting because it's been since January of 2020. I think the market in January of 2023 was pricing in like 10 rate cuts over the course of 2023. And then it started 2024, it was pricing in a dozen rate cuts. I mean, the market pricing in rate cuts does not really seem to be any kind of a real accurate leading indicator. If it is, it's just been so god awful wrong for a couple of years now. So it's interesting to see that maybe he hit the timing right. Maybe it's just the timing on your podcast as to when he said it. Maybe he's believed that for 5 years.
Awesome.
But the timing of him being on your podcast is fortuitous for him. So
I do think his website is a gold exchange, so I think he's kind of a gold permabull. But he did say that the timing was particularly prescient at the time. So there is that also.
Well, speaking of perma bulls, there's a perma bear, Dave Rosenberg. I'm not sure you're familiar with him as a Canadian. Yeah. He actually came out like 3 weeks ago, thinking that, hey, maybe the market does have legs. So in my entire career, it's the first time I've ever seen him turn the corner. So, we're going to mark that on the calendars and see what that is for an indicator. Yeah.
I know. I remember when he did that, when that happened, and my reaction, I think I might have even replied to him on X or Twitter. And I've met him, and he's a very, very nice guy, very smart guy. Yeah. But and his views again are very well educated, right? He's certainly very well educated on the market.
Solid foundation,
100%. But my reply to him was, if this is what this guy is doing, then we all need to get out promptly. Right? So I mean, he's certainly perma bear, again, well argued points, right? But
very well, yeah.
He's been bearish for a long, long time. So if you had listened to him, and you would have missed out on a lot of upside at the very least.
Yeah. Now, listening to a well-argued point of view and a well-supported academic point of view can be very entertaining. The danger comes is if you start taking that and turning it into an action in the real world. That's when it can do harm, right?
Which is why this is so tricky, right? This whole exercise. So
absolutely.
Yeah. And we also had, interestingly, around politics, which is something that generally I don't discuss and kind of outlaw discussing politics for politics' sake. But with all the policy uncertainty, it was very interesting and of course, people were interested in what was going to happen and who might become elected president. And we all know about the polls and how those went. But we did have a couple of people come on and say that Trump was going to win.
Yep.
This is in October, late
Mm-hmm.
October, early November, and actually even earlier. So again, that's a 50 coin flip, right?
Yeah.
Pretty much was at the time, but still. And also this guy also said, which was a bigger surprise, that that the Republicans would sweep both houses of Congress, which also happened. So that was pretty interesting thing as well.
Yeah, he'll get his day in the sun now, just like Nate Silver got his day in the sun back in the day.
Exactly, right.
If you get right for a year, then everybody's going to ask your opinion. I mean, people are still looking up Dr. Michael Burry and asking his opinion on things. He had one home run that he hit and made him famous, and people are now curious as to what he had to say.
Yeah.
In our preamble to this, so you had mentioned that you had an outlook that included a three-headed dog or something, which I was kind of intrigued with.
Well, I've called it the three-headed monster. And
there you go.
Exactly what I've actually called it, the three-headed monster vexing outlooks for 2025. And the three-headed monster comes from one person, and that is Donald Trump. And so far, Trump has been very good for markets, and chances that there are chances that could continue. But what Trump does introduce more than anything else probably is uncertainty. And as you know, markets hate uncertainty more than they hate bad news. So that's why this is a real overhang for things. And if you'll indulge me and go through real quick, there's just there's across three different areas where I think that it's not all Trump, but one of them is inflation uncertainty. And there doesn't seem to really be an off-ramp for inflation. And again, just talking US inflation here, that it's come down, but it's still above the Fed's target. And go ahead.
I was saying, and I think that there's an underlying tide of deglobalization, which is definitely feeding in this. In the accounting world, it went from just-in-time manufacturing to just-in-case. So the more onshoring of manufacturing, the bigger inventories being kept, the less efficient things you're getting. I mean, those are all reactions to supply chain issues that we've seen over the last 5 years. So I think that deglobalization is something that's not talked about in the same breath as continued inflationary pressures. But I do think that there's a causal relationship there. At what level, it's very difficult to calculate because of the timing differences of various things. But it is something that we've seen play out in a couple of instances.
Yeah, that's really interesting. That's a good point. And then, inflation uncertainty inflation uncertainty leads to interest rate uncertainty, right?
Yeah.
And so that's one of these monsters. And another one is policy uncertainty. And we saw with the cabinet that Trump's appointing, and specifically the appointment of Robert F. Kennedy Jr. For the Department of Health and Human Services, what that led to a sell-off in all things health related. And he has been sold off when that was announced. And it hasn't really reversed. So the policy uncertainty, and he's talked about tariffs. We don't know where exactly the tariffs are going to be, what they're going to, what form they're going to take, who they're going to affect. And there's also questions about tax credits, like the electric vehicle tax credit that caused. He's talked about that. He talks about a lot of stuff, but again, that's just the uncertainty that's created here. And then thirdly, on the international scale, geopolitical uncertainty. And one thing that hasn't been talked about really all that much is what to do with Ukraine, Russia. I mean, Trump has at times been opposed to Ukraine and seemed like he was more supportive of Russia, but there's China, there's the Middle East. So there's a lot of geopolitical uncertainty. So added up, and those three vectors, those are, I think, weighing on markets and weighing on things, and could potentially lead to a bit of a reversal here in 2025. We'll see. Not a prediction, but just something to keep an eye on.
The contrary point to that is that we've already endured so much. I mean, Trump has become president. Russia's already invaded Ukraine. You've got the war in Israel. You've got the Syrian war coming to an end. Iran launches 1,000 drones at Israel, and oil prices go down. So, we've already endured events that, on their surface, on an academic level, you would posit yeah, should affect markets, but they don't seem to have as much as an observer may expect. So it could be that markets are a little bit more resilient now because there is this needs to work for everybody. Like Russia needs a global economy that works. The U.S. needs a global economy that works. So there's a bit of a vested interest.
Hmm.
And at the start of this year, they were saying that 70% of the world's population was going to change government this year.
Hmm.
And I think what we're seeing is maybe some of the outflow of that
Hmm.
because you're seeing very real political instability in like South Korea,
Hmm.
France or Germany. They're
Both.
having they're having some very severe issues, uh, and in the moment they seem cataclysmic. In the moment they seem like good fighting evil. But I think if you stand back, it's you can make arguments that we've gone through similar periods in history, and the global economy has found its way forward.
Hmm.
Um, I think the
Perfectly
bigger
valid
issue,
point. Yep.
and I think that the part of the issue with Trump and his tariffs, like I was reading his article, we'll talk about crypto in a second, but there's all these things that he's going to do with crypto, with setting up reserve, yada yada yada. But his actual quote is, "We're going to do great things for crypto." So Trump. Uh,
Hmm.
so it's sometimes difficult to tell when he's negotiating and when
Hmm.
he's proffering policy because,
Hmm.
announcing the tariffs means that he got a meeting with Mexico and he got a meeting with Canada. But that's what he wanted. He
Hmm.
wanted to have a meeting with somebody else that it could look like he slapped them around and he was the strong guy in the room. I think he's probably accomplished a lot of what he wanted to accomplish with tariffs
Hmm.
because he can now say, hey, I told them I was going to do it and they listened and now this, and this, and I'm a hero
Hmm.
without maybe needing to do a heck of a lot more. It's sort of like when the
Hmm.
Bank of Canada or the US Federal Reserve stand up and they start talking the economy up or talking the economy down. If they can use their words to move it, they don't need to change interest rates. Right. So watching Trump do
Interesting
some of
points.
that.
Very good points. Yeah, that's really interesting. Yeah, and to your point, I remember when I think it was a week or two ago when France's government basically, they basically said they stepped down, and the French bourse, the CAC, didn't really move at all. Now it had been in a downward trend, but that news didn't really uh, affect it at all. Yeah, it was literally flat on the day. So
Yeah.
yeah.
Yeah. And I guess as time has gone by, I have been more confounded by the lack of movement of things at times at inflection points, like when an
Hmm.
event actually happens. And now whether the market is omnipresent and understands all these things and the net vote of the whole planet actually gets it right. I'm not sure
Hmm.
why that is. But the other thing we're not talking about is when was the last time you had a soft landing or hard landing conversation this year?
Actually, a couple months ago, also, yeah, and
Oh,
but
really?
yeah, and he said the soft landing was intact. I mean, we've already had the soft landing, haven't we? I mean, is it that's
Well, we're calling it a no landing. Like that was
or no
my favorite
landing?
one.
Yeah, yeah, no landing is probably the fair case, right? But yeah, that's something that we haven't talked about. I mean, we were supposed to have a recession in 2023. We didn't. Things were questionable coming into this year. It's turned out to be a great year. So I mean, that
Well,
kind of looks like we were set to move forward, but that makes the contrarian in me a little nervous. So, there's
no, me
that.
as well. But I mean, I also love my CFA brethren,
Mm,
who like to track things and the interest rate inversion that we've seen.
mm.
100% protected every previous recession within 24 months, and it seems to have failed this time. So I know that they've gone back to do the recalculation.
Yeah.
Um, but it's which is why those things are dangerous. I mean, anybody
Hmm.
who pulled out in 2023 expecting that there was going to be a recession, and that goes back to our market timing conversation.
Hmm.
You
Yep.
missed a pretty good run,
Yeah.
and for this market to crash back to where it was at that time,
That'd be
I
big.
wouldn't say is zero, but man,
Yeah.
the old expression that the chances of being murdered by a raccoon are not zero, but it could happen, right?
Hmm. Hmm. Hmm.
So anyway, the dangers of those kinds of predictions and
Sure.
making decisions based on them.
Yeah,
So
that's exactly right.
do you have a Bitcoin opinion?
Wow. Okay. So, here's one where, I mean, I still don't see that any use for Bitcoin other than gambling and criminality. But name another asset that has appreciated as much as it has over the last year.
Yeah.
I mean, do you know offhand any that have? I don't.
Nathaniel, there you go. You just called it an asset. Like,
you're right.
Come on.
Well, it's an asset for gambling.
I mean, I'm still on the record as calling it the world's largest Ponzi scheme, and I haven't seen a reason to come off that stance. Now, that doesn't mean it can't persist. That doesn't mean that it can't go on for a good long time and people make money at it. But it really does require the greater fool, and until there's an actual use for it, man, I call people out all the time for calling it an asset class. It's not an asset class. I mean,
it's figure of speech in my case, but yeah, you're absolutely right. Yeah.
No, I know, but we fall into that trap. And I was having a conversation with somebody today who was calling it a currency. It has aspects of being currency-like, but I do not think it has earned the moniker currency. But Trump's going to do great things for crypto. So, I mean, that's enough, I think, to give it a little bit of puff in its sails, if you will.
I mean, that's another thing that surprised me. I mean, I thought for sure with the whole FTX thing and Sam Bankman-Fried, I thought that was it. I thought that was the end of cryptos, and it was for a couple months, and then it reversed. So
yeah, no, I'm right there with you. I mean, I read the Michael Lewis's book there, The Infinite Game, and Michael Lewis kind of got caught being a fanboy just as it blew up. So it was a very interesting read to watch the kind of change in tone. But even the so-called or seemingly white knights in that story, they've all gone to jail too. So again, I don't see where it's going to gain the credibility that it needs to have. One of two things will happen. Either it's going to gain the credibility that it needs in order to be counted on to be something, and then it's going to be nothing like the people thought it was going to be because it's going to be fully controlled and all the rest of it. Or it's going to continue to be in the shadows where you use Bitcoin to buy nuclear weapons or, weapons of mass destruction. And, that's going to be completely run by fraudsters until there's a way to shut it down. I haven't seen a convincing case, for it going forward. Let me ask you a follow-up question, because this is something I've asked a few people, and I've heard one or two answers now. The blockchain technology underlying Bitcoin, I've heard has got some uses, but I haven't really seen a really big business case for the use of the blockchain technology. Is there anything that's come across your desk as actual blockchain usage?
No.
Okay.
Simple answer. I mean, no, it's funny, right? I mean, that was the line that people would use, up until a year ago or so. They'd say, well, maybe crypto isn't useful, but blockchain sure is. And blockchain is going to change X, Y, and Z. And maybe it has, but I mean, I haven't seen anything.
Well, there you go.
You're not a marketing term.
You're not a dumb fella. Like if I'm struggling to bump into it and you haven't bumped into it, then I don't think it's made the mark that the Bitcoin enthusiasts were telling it that it should have made.
Maybe it's underlying all this AI stuff. Maybe that's secretly built on blockchain.
Well, see, there you go. You just walked right into my next big topic of clickbait. How do you feel about AI? How do you know I'm not AI right now?
That's a different story. Now that's a different story. Now here is something where the tangible use I've seen and experienced myself. And, if you follow the podcast and the daily thing that I do, thanks to AI, I'm able to produce a daily cover, like a graphic, that looks like a cartoon or like a graphic designer did it in seconds. In what used to take a designer like a whole day to draw and then scan and then review and all these other things. And so that is one tangible use where like I literally plug some words into, whatever it is, and it spits out the image. And I made sometimes I can't use the image right away, but after a couple of iterations and toying around with it, I can. And people have done the same thing with text. I'm a little nervous of that, partly because, I do write for a living, and so that would. But I think. It can absolutely be used there as well for certain things. You have to be careful. You have to edit it, but it's pretty revolutionary on those levels. And there's other stuff that apparently that I can do that I'm just starting to look into.
Yeah, well, you also have to be able to prompt it. Like it still requires a human to prompt it and point it in the right direction and to work with those prompts and work towards better outcomes. Because again, it's still advising people to use super glue to hold pepperonis on pizza. There's still some hallucinations and stuff that it's going through. But you're right,
It is.
there is absolutely a use case for it right now. There's the doctors in Ontario are now using it to annotate medical notes from client
Hmm.
meetings.
Wow.
So we're using it in our practice to annotate notes from meetings, and it does
Wow.
a passable job at that, and it's learning and getting better.
Mhm.
So yeah, there are some absolute use cases for it. I think the problem is it spins into, oh my God, it's going to take over humanity. Kind of, it's, going to replace all of the consultants. It's going to replace all of the lawyers. It's going to replace all the accountants. I mean, I think there's some pretty extreme concerns about what it's capable of, but there's still some fairly major limitations to the technology at this point to really set it loose on those things. But for me, this is very, very similar. It takes me back to, and again, my age is going to begin to show that the first personal computers going into people's homes and
Mhm.
the advent of the internet. The internet was an amazing thing, but nobody truly knew how transformative it may or may not be.
Mhm.
Like, it was one of those, you're going to use it and it's going to change things. And I kind of think that's where we are with AI right now.
Yeah.
We're going to use it to see what it's going to change.
Yeah, I think so too. But I'll tell you, if you look at some of these things that AI has done, I mean, if I were in Hollywood, I'd be very, very worried because
Yeah.
you can create a film and it looks like a real film. I mean, we're not talking like a cartoon. Like you can do that like with a couple of prompts. And I don't know. I mean, that seems like the type of thing that rather than dealing with actors and agents and all these other things, I don't know.
Well, I mean, it's just changed. I mean, the business model of Hollywood has changed with the advent of the streaming services for sure. That has
Mhm.
dramatically changed that. But hey, this goes on to another. We have to talk about Taylor Swift in order to be relevant right now.
Sure.
But I think one of the things I would say about Taylor Swift from an economic perspective is that she really has embraced the change in the music industry. Everything's gone
Mm.
streaming, so it's not about album sales anymore. It's about providing that experience. And economically, she's been a powerhouse in that regard. But I think she's really leaned into the changes in the industry, which is kind of what you look for when things are on the change.
Yeah, yeah, and there too, I mean, the proof is in the pudding, right? The numbers don't lie. I mean, if
Yeah,
Taylor Swift concerts generate $1 billion a year, obviously they're doing something, whether you like
yeah.
the music or not. And I think personally that she peaked with the 1989 album. That's my personal opinion. Probably wrong, but whatever. Um, which was
You're a
what, 10 years
Swiftie.
ago,
I knew it.
more. No, not really. But having said that, I haven't really listened to much of the more recent ones. But again, respect to her. What I pay, how much do these concerts cost? $1,000 more?
Well,
I don't even
if
know.
if you got the original tickets, they were only a couple $100, but they were reselling
Oh,
for thousands and thousands and tens
okay.
of thousands. So I mean, it's that
Well,
that
for a
whole
couple
game,
hundred
that whole
bucks doesn't seem bad, but you have to like game the algorithm to be able to get that, right?
yeah, yeah,
So
exactly. You have to use AI in order to get in line to get the tickets, right?
yeah, maybe that could work. Yeah. But I mean, some of the experience that I've read about from people who I know and whose opinion I trust, that coming back from these concerts and talking about what a transformative event it was for them psychologically, like literally,
Yeah,
good. That's amazing. So yeah.
yeah. Well, I know that I'm not that impactful, so I celebrate those that maybe are.
Yeah.
Are there any other really big hot burning topics right now at the top of your list? Do you want to tease any upcoming episodes of the Contrarian podcast or?
Well, I already did the natural gas one. I have a lot, there's a lot coming down the pike next year. There's some interesting books that are coming out, and some authors that I'm going to have on. Um, and it's going to be like we said, it's going to continue to hunt for the contrarian view and other ways of explaining what's going on right now and possibly finding holes in the armament here of this big bull market, because it's going to end eventually, right? I mean, the bull market is going to end. They all do. The
Yep,
only question is when and how.
yep,
So
yep.
that's going to be, yeah, I think that's the main question for me right now as we enter 2025.
Well, it's the same for us. It's been a great run. We've enjoyed the run. We've been a little conservative this year and still done fine. But we don't need to be at the crest of this wave because you got to wake up tomorrow, and who
Mm-hmm.
knows what that next thing is. So we will join you on the voyage of taking a look at the other side going
Mm.
into next year to see where we think the chink in the armor, as you said, or what the things are to make us maybe less euphoric and a little bit more even keel with our approach to things as we go forward.
Yeah, and I look forward to having you back on the podcast too next year.
You know, my schedule can be made open, and you
Cool.
will find something fun to talk about. And Nathaniel, I want to sincerely thank you for joining me here on Barenaked Money.
Thank you, Colin.
And recognizing that didn't mean to show up naked, that we kept our clothes on. And it's been an interesting conversation, and I encourage our listeners to check out the Contrarian Investor. And I'm sure we will be collaborating again soon.
Thank you very much.
If you're breaking a sweat trying to figure out what your financial advisor is talking about, you're not getting the service you need. You probably hate trying to get an answer from them, but you also think moving your accounts will be a headache, and it might be. But working with don'trocktheboatwealthplanning.com or .ru isn't exactly stress-free, is it? Call us. We will demystify the world for you.
For more information on the subject of today's podcast or any other financial topic, please visit us online at verecan.com. That's verecan.com. There's plenty of information there, or you can reach out to someone on the team. Thanks for listening. Please note, the information provided in this podcast is for general information purposes only. It is not intended as financial, investment, legal, tax, accounting, or other professional advice. Our discussions are not a solicitation to buy or sell any securities or to make any specific investments. Any decisions, based on information contained in this podcast, are the sole responsibility of the listener. We strongly advise consulting with a professional financial advisor before making any financial decisions. Listeners should be aware that investing involves risks and that past performance is not indicative of future results. Barenaked Money is produced by Verecan Capital Management, Inc., a licensed portfolio management company in Canada. We operate under the regulatory framework established by the provincial securities commissions in the provinces within which we operate. The views expressed in the podcast are our own and do not necessarily reflect the official policy or position of any regulatory authority. Remember, at Verecan Capital Management, Inc., we focus on aligning our goals with yours, prioritizing integrity and transparency. For more information about us and our services, please visit our website. Thank you for listening, and let's continue to challenge the norms of the financial services industry together.